Hi, this is Zach Mayer with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 18th of July. Starting off with the FTSE 100, which is now near the top of its range, and also near that May resistance line there, 82.75. Want to see end of day close for the FTSE above that, and also above RSI 55, which has blocked for some reason progress since the end of May. End of day close for the RSI above 55 could be a leading indicator on a breakout. Initial target then 83.71. But saying that, can't rule out a final rug pull just to get people out of, stop people out below 8100, because we've been in a range between 81 and 8300. And so possibility of hitting that red May support line projection at 80.60, and then we head higher. Top of the channel is heading for as high as 8700, but it's difficult to see what would take the market up to that level, apart from maybe M&A, etc. Moving on to the DAX, and here the picture not too different from the FTSE 100, but we've got that rising trend channel there from back in September. The floor of the channel, 18,300, looking for a proper break of the May resistance line there, 18,600, bit of bull trap at the turn of the week, and if we can get through that, then we'd be looking for the top of the rising trend channel from the autumn as high as 19,900 by the end of next month. Downside expected to be limited to 18,000, which is just post-June support. RSI bouncing off neutral 50, which is a positive, as is the way that the 50-day line is rising. Moving on to the Dow, which has been living in a world of its own, and here, rising trend channel there from this time last year, top of the channel there heading for 42,000. We were looking for that by the end of next month, but the way things are going, it looks as though we could get that by the end of this month, while we're above the 40,000 level. But amazing run there for the Dow, flagged by the way that support was coming in multi-day time frames above the 50-day line, even on intraday dips for this market. Worst case, obviously, is that we have to go back to the floor of the channel there, 39,100, but we're hoping that we'll stay on the right side of 40,000. A market which has also revived itself in the recent past has been Bitcoin, and here you can see we've got a little bull flag resting on the 50-day line at around 64,000. Above that, looking for the March resistance line projection just shy of 71,000 over the next week or two. The overall pattern here probably that we've got a rising trend channel in place since the autumn, since October, and we basically bounced off that October uptrend line when we headed down to the sub 55,000 area. But the key here, holding above that 50-day line for this market after the bear trap rebound from below June support and the bullish divergence that signaled the turnaround. Moving on to gold, which has been going great guns, headed into new higher territory. What we want to see now is support coming in between 23.30 and 24.30 rather than 24.50, and then that happening ahead of a move up to 2600 by the end of next month, and the top of that rising December trend channel, but obviously looking pretty set fair at the moment. Moving on to the stocks, and starting off with Avacta, where I'm sure the bears are bitterly disappointed but that the shares haven't gone down after today's RNS, and trying to call the stock down at the same time. But from a technical perspective, we bounced off our previous target there at 63 pence earlier in the week, and still looking for the 200-day moving average, and 88 pence is the target. We obviously missed that target the first time around, when the peak was 86 pence. But hopefully now, with the news out the way, and also with the RSI rebound above neutral 50, we can get up to the 200-day line, which I think would be the minimum that we can expect, given that we haven't actually touched the 200-day line since the first few sessions of the year. And normally the 200-day moving average in a bear run even acts as a magnet for the price action. But above 63, still looking for 88 on Avacta. Next up is a stock I hardly ever look at, and I don't think anybody else does either, Creighton's. And here we've got a bear trap. Well, first we've got a bear trap below the March support there at 18 pence, and then we've got a gap close there at 21 pence. End of day close above 21 pence, whether it's today or in later sessions, could take us up to 29 pence by the end of next month, or even sooner than that. But that gap close signal and the rebound from fresh lows suggests that there has been a bear trap effect on that stock. On to Deltic, which has become a bit of a favorite here, and that's on the basis that we had this U-shaped turnaround, which was spotted relatively early, And now we've got this handle on the U-shape, so it looks like a cup and handle with a gap going down there, and hoping that the shares will at least hit 16 pence at that red May resistance line projection, effectively the top of the triangle since back in May. And upside valid, especially while we're above the 50-day line at 11 pence. And actually, given that cup and handle formation, we're actually looking for much more than 16 pence. We're almost hoping that we will rebound in the way or as sharply as we fell the other month back in April. Moving on to stock which is also a bit of a rarity here, and it is called Exchange XR, and you can see here that could be an early bird opportunity. The falling wedge very, very narrow there, and needs to break, I suppose, 1.15 pence, 1.15 would do the trick. Bullish divergence as well, and if we have an end of day close above 1.15, looking for the 50-day line there, just shy at 1.5 pence, even if the shares go back down after that. The other point to note, if you look very closely, is that we've closed that last gap, the exhaustion gap, and that should be a signal that we've got the bears on the wrong foot, and 1.5p could be on its way. Early and end of day close back below the floor of the gap there, 1.05, delaying the potential rebound scenario. Looking at Hornby for the first time in a long time, obviously we came back from the dizzy heights near 40 pence back in the spring, but it looks as though the shares have bounced off the floor of a rising trend channel there around 19 pence. We've got the 200-day line rising still at 23 pence, and the longer we stay above the 200-day line, the greater the chance of the shares filling that gap up to 38 pence, hoping that that will happen sometime between now and the end of August. On to HYDROUtopia, where there seems to be a slow burn reaction to the recent cannabis production canopy growth news. Here we've broken that resistance line there from back in February, around 6 3/4 pence. Above that, looking for 12 pence by the end of next month. If you're cautious, you wait for an end of day close above the recent spike, 7.5 pence, before assuming that 12 pence is on its way. And obviously we want to stay on the right side of that 200-day line at 6 pence. In the meantime, returning also to Milo Resources, and here also looks as though the shares overdid it on the downside. Bear trap rebound from below the April support there around 0.5 pence. Above that, we're looking for a penny as soon as the end of next month at the top of that triangle there from back in November. Ideally today, we stay above the 50-day line, 0.62, and have a imminent close above the 200-day moving average, 0.71. Haven't been above that black line there for nearly a year, so a significant technical change there, along with the bullish divergence with the low for July, but higher RSI trace, so it looks well set up. On to Prospex, which I haven't looked at for quite a long time, and in the meantime, the shares have got their act together. We have had an unfilled, well, we had a gap to the upside at the end of May, fill the gap, and then we've also had a golden cross buy signal at the beginning of June. That set up the shares quite well for our target there at 10 pence, which is a early 2023 resistance line projection. I like this U-shaped formation here, and also the way that the shares have found support above a rising 50-day line and had multiple bounces for the RSI at and above neutral 50. So 10 pence looks like the minimum here. Ideally, we get up to 12 pence, the April 2023 resistance by the end of next month, while we stay above the 50-day line at 7 pence. On to Pennpetro, which blew the lights out yesterday and is trying to blow the lights out today as well. Obviously a great update from the company. 1 + 1 is equaling 3, and a bit more than that as well. Interesting that ahead of the news yesterday, there was a bit of bullish divergence with lower lows but higher RSI trace. So maybe one or two people guessed that there was going to be a four-bagger opportunity on the way. But putting such considerations aside, we got the shares between the old resistance, post-November resistance, 2.3 pence, and our previous target here, the 3.3 pence. Above that, looking for a final move in the near term at least, up to 4.5 pence. So basically above 3.3, looking for 4.5 pence over coming days on Pennpetro. You can see there's also a gap to fill up to that area as well. So hopefully Pennpetro will come up with the goods. On to another relatively obscure situation, TPX Impact, and here golden cross in the last week, unfilled gap to the upside for the shares to start the rally, so that's worked. In fact, there have been two gaps to the upside in the recent past. There was one also last month. Current situations that we're looking for the shares to at least hit the top of that rising trend channel there from January last year at 60 pence by the end of next month. And this rising in a step fashion, very, very bullish. In fact, one could probably say that 66 pence and the higher resistance line projection and price channel top are the destination, or is the destination for this situation. Moving on to United Oil and Gas, which has been obviously rather painful over the recent years, but it does look as though the rising trend channel base that we identified a week or two ago is in force, and we could head up to 0.28 at least, while we're above recent support around 0.18. The other point to note is that the 50-day line is starting to rise, so that should be helpful in terms of getting momentum going. There's a gap to fill also from February up to 0.32, so hopefully 0.28 and 0.32 will be on their way. On to the last two. First one is URA, where it's always interesting to note when a stock is up after a fundraise, and this is one of them, so it's up 6%. But still like to see the shares break the 200-day line at 1.75 pence on an end-of-day close basis, and then set up a move to 2.7 pence, maybe by the end of next month. Ideally, we stay on the right side at 1.4 pence. Support on the way down back in June, ahead of a potential turnaround. Union Jack is the last contender today, and here further news, well news coming up today. Unfull gap to the upside is the second one in the last couple of weeks, or the second one this month. Looking for initially 21 pence and then 26 pence, hopefully by the end of next month. If you're cautious, you'll wait for an end-of-day close above the 200-day line at 19 pence before assuming that 26 pence is on its way. You can also see we've had a double bounce of the RSI on neutral 50, which is helpful for the bull cause. That's it for me today. More updates tomorrow.